Imagine having a magic crystal ball that predicts the stock market's future, allowing you to make informed investment decisions. Unfortunately, no such crystal ball exists, but there are tools that can help you navigate the market with confidence. Today, we're going to talk about two popular investment options: index funds and ETFs. Which one should you buy? Index funds have been around for decades, providing a simple way to invest in the market. They work by pooling money from multiple investors to buy a small piece of every stock in a particular index, like the S&P 500. This gives you instant diversification and reduces the risk of any one stock performing poorly. Let's look at a real-life example. If you invested $1,000 in the Vanguard 500 index fund in January 2026, you would have bought approximately 0.015% of the entire S&P 500 index. This means you'd own a tiny piece of Apple, Microsoft, and other market leaders. By the end of 2026,